So Pre-App 1003 is a total ass kicker. It honestly is. It's not only great for your systems and running your loan, but it's also great because it can make Facebook Live pay for you. It makes your videos pay. Now we have Pre-App Agent. Pre-App Agent allows real estate agents to make videos and actually capture leads. I'm doing this right now and we're kicking butt with it. Real estate agents, if you have an app, nobody's using it but when they're buying a house. This app, they use all the time. You have to be curious. I'll tell you it's free. All you have to do is show up tomorrow. That's Wednesday, okay? It's a free webinar. Click this banner right over there. Loan officers, invite your realtors to go to this because you can hook your Pre-App 1003 up to it. Pre-App Agent, Wednesday webinar. Click this banner right over there. You will love this. It's brilliant.
I know, I'm excited.
I am. So everybody knows Marie Antoinette, and when she said "qu'il mange du gâteau," well, what that means is let them eat cake. She, got her head chopped off.
Yikes.
Now, maybe that was a bit extreme, but hey, listen, if you were truly starving to death and a government official living high on the duck à l'orange told you to eat cake, you'd probably want to do the same thing. Now, I'm telling you, if your whole community suffered the same fate, starvation, somebody's going to lose their freaking head. Now, I'm sure Marie, she didn't mean any harm with her statement. You know what her problem was, Frank? You know this, right? She didn't fully understand how the king's policies were affecting those that he ruled over. She's ignorant of the situation. Now, their view was too high up to see the effects way down low, okay? So, case in point.
Seth Frutman, the ombudsman of the CFPB, just quit.
He's out of here.
He said in a letter to the CFPB director, Mick Mulvaney, and we quote, "It has been an honor of a lifetime to spend the past 7 years working to protect American consumers. On behalf of the 44 million Americans struggling with student loan debt, however, after 10 months of your leadership, it has become clear that the consumers no longer have a strong independent consumer bureau on their side."
They don't? All those Americans don't have the government on their side? Oh my God. Well, truly, thank God. Because if the Bureau protects students like it protected mortgage borrowers, then this is truly a blessing for students. Now, this is where Seth stacks his bumper seat on top of his soapbox. Go on, Frank.
Okay. Each year, tens of millions of student loan borrowers struggle to stay afloat.
Okay.
For many, the CFPB has served as a lifeline, cutting through red tape.
Stop, just stop.
It's time to stop, okay?
Stop. Okay, cutting through red tape. Like they cut through red tape with the mortgage industry. Frankly, all they did was create more red tape, making loans take longer and, of course, costing more money. Continue.
Demanding systematic reform when borrowers are harmed.
Oh, really? When borrowers were harmed? Well, just keep going.
And serving as the primary. Financial regulator tasked with holding student loan companies accountable when they break the law.
Okay, the primary. Okay, so this is the primary agency, the primary regulator, right?
Right.
Huh? Are you kidding me? That implies that there are others, but they, you see, they're the primary.
Okay.
That means there's not many. Or the others, maybe they're overburdened because not only is the CFPB the primary, to quote Donnie Wahlberg, they're also the new kids on the block. So clearly they're necessary, the CFPB. So my question is why? Why is this new agency necessary? Why do we have to have them? Aren't there other agencies that could pick up the slack? Aren't there other agencies that are already picking up the slack? Well, let's see. Grant, please cue the music.
The U.S. Securities and Exchange Commission.
Yeah, they can do it. The Commodities Future Trade Commission.
Sure, why not? The Federal Reserve.
The Financial Crimes Enforcement Network. That's a good one.
Yeah, the Federal Deposit Insurance Corporation.
Well, they insure these loans. Financial Industry Regulation Association. It's an association to regulate regulation.
Hey, how about the Office of the Comptroller of the Currency? Need one of those.
Yeah, they're currently doing it. The National Credit Union Association. Someone's lending money.
Office of Thrift Supervision.
That's a good one. The Department of Education. My gosh, if they're not doing it, who is?
Let's not forget the Office of the Treasury.
All they deal with is money. The Department of Justice. All they deal with is crime. Why don't they go together like peanut butter and jelly?
And not to mention the state. Not just the federal, but state attorney general.
That's right. And because right now as we speak, Illinois, Washington, California, and the state of Pennsylvania, they're all suing Navient, which is Sally Mae's book of student loans, which is, by the way, is worth about $300 billion.
Man.
Now, the state, they can take up the fight too.
Anyways, those states sued, and then the CFPB jumped on and sued too.
Just like Wells Fargo, the LA Times figured out they were screwing their consumers, then the DOJ, they jumped on and sued, then HUD jumped on and they sued too. And only then did the CFPB jump on and sue too. You know, that kind of read like a Dr. Seuss book. Why do you need the CFPB too? To sue who?
To sue who too?
Okay, because they can't sue too, he became mad and said tally who to the Bureau too.
That was very good.
Thank you.
I'm glad you got through that. But now, this will get blown completely out of proportion when in truth, to want a more efficient government with one of the many agencies to regulate with a steady hand, rather than the new kids jumping on the block ready to punish, is a reasonable position.
I think so too.
And as we saw with mortgage lending, that type of consumer protection often hurts the very ones you're trying to protect. Just like Ike and Tina.
That's right. Now, the truth is, maybe if you're going to become a PE teacher, which is a great job, by the way, you don't need to go to USC and rack up $80,000 in student loans, where part of your personal allotment is probably going to beer bongs while doing a handstand on top of your keg of St. Pauli girl. However, if you choose that job, you also choose those payments that come along with it if you get the student loan. And it's not that students don't deserve protection. In fact, they do, and they have it with or without the CFPB. But like the housing industry and the problems, you know, that we've kind of saw in the past,
right,
there has to be some personal accountability for the money that you ultimately choose to borrow.
There's terms on
Just
a piece
saying.
of paper. And when you sign it, you're saying, I've read the terms and I agree to them.
Right.
Here's my signature.
Right. But no, I don't like that payment now.
But now things have changed.
Right.
Now I don't like it, so I don't want to do that. Now I'm being harmed.
It doesn't say on your note, I agree to make these payments unless I choose to do bong rippers after school and not get a job, or if I'm underpaid for what I think I'm worth. It doesn't say that. It says you borrowed this money, you agreed to pay it back, and if you can, that's what we call an obligation.
Yeah, there you go. So this guy's out of the CFPB. That's the way it is. You guys, let us know your thoughts on all this down below. Do us a favor. Forward, share, subscribe. Catch you guys later here at the National Real Estate Code.
You know, one last thought on this. Seriously, every single one of these colleges has endowments that are nuts. Like the biggest schools that charge the most have endowments in the multi-billion, billions of dollars. They could certainly lower the cost of education and they wouldn't feel anything whatsoever. Nothing.
They could still get their super
So
awesome scotch.
maybe it's not just necessarily like the student loans. Maybe the schools ought to do something about it too. Why isn't anybody talking about them?
Well, you are.
Yeah.
We'll see you guys.
Later.
Bye.